Hello and welcome to the Amber Stitt Show. I am your host, Amber Stitt, and today we welcome Jacquelyn Baker from Berkshire Advisor Resource. She's with us today to discuss business owner strategies and different products and different offerings that she's been educating other advisors on throughout the years. And she and I have worked together for, I think, about 3 years now, so it's been a little bit of time. So we always have fun when we can at conference, even though it's not that often. But you were telling me that you're doing a lot of education recently for financial planners or advisors, those strategic partners that work along with them. And I've been also talking with a lot of our business owners and their tax advisors, even estate planning attorneys, on some of these strategies. But there's a lot of information there. And I thought that we could take maybe a part of that webinar and break it down in a simplified version today on the podcast, because not everyone's a business owner on this podcast, but they might work with a strategic partner or an alliance that might hear about some of these ideas and be able to put them into motion. So I want to say thank you for being here today, Jackie.
Thank you, Amber, for having me.
Yeah, and so I think you might be you're not out of the country, but it kind of feels that way. So where are you located right now?
Currently, right now, I'm in what's called Waikoloa Village on the Big Island of Hawaii.
And what's beautiful about the business is that we can work from anywhere, really. So that's what's always fun about our business model and being able to help people, whether it's clients or advisors. So aloha from Arizona, but we're only, 3 hours apart now at this point in time?
Yeah, 3 hours currently. So,
yep.
We have an office here, and that means that we are up at 4 o'clock in the morning to get started on our day.
Yeah.
Make sure that we are, in sync with the mainland.
Oh, yeah. I mean, East Coast times, that's an early one. And
Yes.
I'll even do that 5 a.m. for my inbox, check in the email.
Yep.
But okay, perfect. So why don't we, for the Pathways of Peak Performance audience, I always like them to know a little bit about the guest. And so can you explain a little bit about your business and kind of like some history behind BAR and what you guys do?
Absolutely. So Berkshire Advisor Resource was founded in 2000. I started my career as a career agent with Berkshire Life Insurance Company before they were part of the Guardian system. And at that point, we had separated from the career system and gone independent. So for the last 23 years, I have worked with advisors specializing in income protection solutions, as well as solutions for business owner clients, basically acting as their backroom expertise to assist them in helping their clients put these protections and risk management things in place.
All things risk management. So we try to keep it exciting, but it's not always the most exciting topic, but it's necessary, right?
It is necessary.
Yep. So you and I work closely together with medical professionals in disability insurance, life insurance. And so I wanted to dive a little bit deeper in these business products. And so I think we could kick it off with talking about business overhead expense, otherwise known as BOE, but it's a disability insurance product. And a lot of people can get confused, especially when they think about writing off maybe paying for one of these products as a business owner through a company. And sometimes they're thinking about a personal disability policy and not one of these. And so do you want to give us a little bit of just a simple explanation of what a business overhead expense policy does?
Basically, a business overhead expense policy reimburses the business for any type of business expense that a company would endure, even though the owner may not be able to work and pay those expenses. So any small business, any business at all that has expenses can, put in place a business overhead.
When I work with clients and we look at part of the applications for these, they forget that there's these line items. We have to turn in salaries, expenses, what keeps the lights on, even like you had listed some janitorial maintenance. So really any of those expenses that is part of the business, this policy can pay for those things. That's what it's for, correct?
Right. So if you think about reimbursement for salaries for employees, that's an eligible expense. Lease payments, attorney's fees, accounting fees, janitorial, anything that would be a legitimate business owner expense can be written off. And the thing I think that most advisors forget is that most individuals, when they're doing their own income protection solution just for them, most clients don't want to use that money. That's supposed to reimburse their income. So they don't want to have to use that to continue to pay the expenses that they incur in the business every month. So the overhead is a reimbursement contract. And the way it works is that you put in a certain dollar amount in place that will cover your business expenses every month. And you submit your receipts to the insurance company and they reimburse you for those expenses back to the business to be able to pay those. And the interesting thing about that is one of those, if we were to pick a round dollar amount, let's say $10,000 a month, and 1 month the client only needed $7,500 of it. Well, what happens is they don't lose that $2,500 difference. It rolls over to the next month. So the next month, if they have $12,500 of expenses, they have that full amount eligible to be able to write things off, because not every month looks exactly the same.
Yeah, it sounds like sometimes can we have a partial disability rider included? Is that part of this, where if there's income loss, can there be
some
a
businesses
function?
don't experience an immediate income loss. There may be outstanding accounts payables and things that they're billing that, that reimbursement, they may not need it right away. So yes, there is a partial rider on there that would allow, at a certain loss of income to the business that it would kick in but typically overhead expense will be a full disability claim on that.
Right. Okay. So it's a qualifying event, fully disabled. Okay. So I see a lot of these come up when people are going through small business loan requirements at the bank, and they'll call and say, okay, hey, I need this policy and I need maybe some life insurance too. And there's a couple ways that you can solve for these loan requirements through the business overhead policy. So there are some loan features you can plug in on top. Not every carrier offers these, but can you speak to the loan indemnification riders, how those work in addition to the base benefit for the monthly expenses?
Right. So if there's a business overhead expense with a rider that has a loan indemnification option on it. And basically what that does is it indemnifies the bank that if the owner of the business were to become disabled, that the bank continues to get paid that loan payment. And it, like I mentioned, it can be a part of the overhead expense itself. It can also be a standalone rider. And so we see this with a lot of business owners, in particular, that have to buy equipment when they're first starting out in their practice. So we see it with dentists, we see it with veterinarians, but any client that has to buy equipment to be able to operate their business, typically they're taking out a loan to do that. Most of the carriers do require that it have at least a 3-year term. And what it does is you put in force the amount of the loan by month. And it involves some signing of paperwork to the bank to basically a promissory note to the bank that the insurance proceeds are going to the bank to pay off that loan. And we find this especially helpful for somebody who is starting new in the business that doesn't necessarily have a history of revenue. And maybe the bank is on the fence about whether they want to give those funds to that business owner, that having that loan indemnification in place makes them feel more comfortable in that situation to be able to put that loan in place. And
that's good news. I know that I've seen a lot of my loan terms that I've been building are 10 to 15 years, not the minimum of 3. So when you put that in perspective, you have something that can cover the business expenses plus the loan requirements. So like you said, some of it's just strictly benefits to the business, but let's talk about how that can kind of just fall off or you remove it. At some point, when you've met the loan requirements, you might let that rider, we can remove it, but still keep that business policy active for the normal day-to-day operations, right?
Correct. And so the amount of the policy actually is reduced each month that the policy is enforced, because as you make those payments over that time period, whatever the term is of the loan, that, the amount that you owe is 1 month less for each month. So it is a reducing kind of term, is a good way to put it, on that loan indemnification policy.
Okay, so that's good. But this is different than disability buyouts. So, correct? So can we talk a little bit? I think this is one of those products or contracts that a lot of people don't really think about, or at least I don't hear it. We don't get a lot of questions on it, but it certainly is an important one to have in a partnership type of situation, correct?
Right. And I think the big thing with the disability buyout policy that you see a lot is advisors talk to their clients about the life insurance portion of it. And often when you are talking to business owners, you will ask them, do you have a buy-sell agreement in place? And they'll say yes. And then the next question should be, is it funded? And when the client says, what does that mean?
Right.
Does it have some life insurance in it? Does it have, in cases of disability in there? So anytime you have a disability a buy-sell agreement that there's more than one person in that business, it's a good idea to have that funding. Because one of the tenets in financial planning that we hear all the time is if you are in a partnership or you have multiple partners in one situation, do you want to be in business with their spouse?
Can you elaborate a little bit? Because I feel that even my spouse will say the acronyms, the things that we talk about for layman's terms, and I think you're already stating it, Jackie, so it wasn't that you were using acronyms or verbiage, but explain that a little bit more so that people can kind of take a pause, because if something were to happen to the partner, how does that play out? Because there's usually somebody else also looking for they have maybe some dependency on the income that's now not there. Can you talk like just kind of a quick little story how that could shake out?
Well, if you think about it, each person in that business has value, and they have a certain value percentage that they own of that business. So if an owner were to pass away or become disabled, that value doesn't go away, and most families want to be reimbursed for their portion of that business. And if you don't have funding in place, then it is likely that a spouse or a child, someone that would typically inherit that asset, and it is an asset for their value of the business, that next thing you know, they're your partner. And they're having a say in your business, that maybe it's not their expertise, maybe it's not their full-time job, but they're looking at it as, this is, whether it's half or a quarter or 10%, I own this now, and I'm going to have some say. So to kind of remove that conflict of interest, having that disability buyout in place that takes into consideration those things so that family is reimbursed for that value.
So the good news is the conversation you can have up front, it should not be offensive to anybody, because these are common steps in the process with business practice and just making sure that all bases are covered. So it's you can blame it on the business if you have to, but let's get it done up front. Okay, so
really quick, Amber, let's talk about how those work. So in a lot of cases, you would typically have like 2 partners or 4 partners. It's an important thing to think about how, depending on the number of partners, how you do it. There's different ways you can do what they call cross purchase, which is very easily done with 2 partners. But if you have 2 or more, you want to do an entity purchase, meaning the business is purchasing those policies. So, if you have 4 people, what happens is you end up, if in a cross purchase situation, having 16 different policies so that all 4 owners are covered different ways. So there is some consideration solution for how those are set up. The terms typically want to match the buy-sell agreements, so whatever is put in place. So sometimes it's easier to research what the carriers offer in terms while you're putting together a buy-sell, because they can't always be customized to fit what your buy-sell agreement wants to do. And so there is some thought to that. And typically, if you have, we've seen scenarios where we've had 14 business owners. Well, typically a traditional carrier requires at least a 10% ownership share to have the disability buyout policy. So in those situations, you might be in a non-traditional market, but we have done that with multiple owners when their percentage of ownership is less than that 10%. So those are options as well.
Perfect. So, and then these also consider the age differences too. Sometimes there's a higher expense for some than the others, right?
That is true. And especially in closely held family type businesses, typically will be in a non-traditional market. If you have a older owner and a son or daughter working in the business, a lot of our domestic carriers that have this as a solution are concerned about that. So the delta between the older owner and the younger also becomes a consideration that we would go into the marketplace to make sure we're finding the best solution and who will accept that risk.
And on that note, we might as well go there. These are fully underwritten, correct?
Yes, they are.
Okay.
Typically, so not only business financials, but your telephone interview, in some cases, your paramed or mini exam, and that typically means blood, urine, physical measurements, so height, weight, blood pressure. To obtain most of these policies. Okay,
so you might not have an answer to this. Do you see any issues with when some of the partners are declined? Is there a way to pivot and kind of do some other solutions if somebody's not eligible based upon their health?
There are other solutions. So typically we have impaired risk options in those scenarios so that we can get all the partners covered. If for whatever reason you just cannot get someone covered, the carrier, they want you to apply. So that application is necessary. And then if they were to decline it and even declining it in the impaired market, at least you are attempting to get all those owners covered on that type of policy. And unfortunately, in a situation where not even an impaired risk option would take a owner with lots of medical issues. In that case, then the business is really looking at having to fund this option themselves with what we would consider a sinking fund to be able to fund their portion of it.
All right. So that is awesome information. How is this different from a traditional key person policy?
Okay, so key person is in most scenarios used where you have somebody who is critical to business operations. Typically that person is maybe the head of sales, so they're your top salesperson. When you hear the phrase golden handcuffs, that person that you really need to keep that business going and have it be successful. So what that is, it's a business owner or business entity owned type policy that typically you can do 2 to 3 times that key person's salary that would reimburse the business so that they are able to hire someone to replace that individual if they become sick and hurt and unable to work. And so it's more of a reimbursement to the business rather than to an individual themselves to be able to hire and get that person get somebody as a replacement.
It's a safeguard for the business to then go find the next expert if there's something, and it's death or disability, right?
Yes.
Is that what we're kind of looking at in both the circumstances? Do we have a backup plan to still stay moving forward? So outside of the traditional, we have the business overhead expense, disability buyout. We talked about the business loan indemnification riders, key person, anything else that are kind of like the standard traditional when you have case design because you have clients with needs. Outside of these, are there any other policies that are typically talked about once we're in the conversation?
Well, one of the other things that you can talk to your business owners about is if you are doing and working with that business owner on their full comprehensive financial plan is, do they have a retirement plan? And as part of that plan, whether it's a 401k, profit sharing, whatever the established amount is, what happens to their retirement accounts if they were to become disabled? Typically, most people would say, well, I'll just draw down my assets. Well, then that puts your retirement future at risk. So there is a solution currently that is a retirement funding option that you can put a policy in place that if you were to become sick and hurt and unable to fund that plan, that this actually funds it each month. And it can be up to whatever the annual ERISA max is, depending on your income, to be able to have a policy like that. So, you're already, if you're in an adverse medical situation, you're sick, you're hurt, you're unable to work, you're already going to be using probably more expenses for medical and other things. The last thing you want to do is put your retirement at risk. So this at least makes sure that it continues to be funded, even if you aren't able to fund that every month yourself.
I think a lot of people, when they get their private disability or have their group disability contracts for their personal household bills, they forget it's not just for income, it's for funding retirement. And if you were supposed to work 20 plus years and have this retirement plan, what if that just is, it's stopped way in advance, way earlier than you have thought, then everything's being reduced. So we don't want to keep chopping up the benefits. Some of it's just going straight to the business to cover expenses for a period of time.
Yeah. So typically what the carrier has is a separate trust account for those assets to go into. The carriers, I'm thinking, have, a suite of mutual funds themselves, that it goes into that and it will be invested, on the client's behalf. So it's not something that the advisors would necessarily control how those assets are, put in place. It is all into a trust, and then the carrier themselves manage those funds.
And I think that's what the beauty behind working with independent agencies and brokerages, or whatever the terms might be, but people with independent solutions, we can then build and customize as needed or as the partners want certain things. And so it's pretty neat once you get your advisors all together. And what's nice is that maybe the insurance teams are working with the attorneys and then the tax advisors. And so we're moving forward, and then you have your counsel and you don't have to do this alone. I don't think we hear about the retirement planning solution enough. Another one that I think people are trending and talking about are the critical illness contracts. And so, do you mind breaking down? I think a lot of people, when you think of an employment situation and you hear about this AD&D, accidental death and dismemberment, people have this opinion about what they think that is, different from the accelerated death benefit rider. But then there's critical illness. And so do you want to kind of break that apart so people can go, okay, now I get what AD&D does? Because it's a very interesting one. I don't know that if it's automatic, why not? But I don't know that I recommend buying sometimes the AD&D on top of a term policy and some of these other things. But what's your opinion on that?
So critical illness, the interesting thing about that, because you'll hear a lot about, cancer, stroke, heart attack type coverage.
Yeah.
So in those cases, an individual critical illness policy that is fully underwritten has so many other things that can be covered. So there are both simplified issue amounts that limit the medical things you have to do to collect on those policies versus a fully underwritten, where in one carrier scenario, I know they have 27 different medical conditions that are covered on a critical illness.
So what you're saying, sometimes these I always say automation and efficiency is great, but sometimes it could be to your benefit to get the blood draw, to not automate, because you might get so much more. So it's nice that they have the automation for those that might, but there's benefits and kind of the beauty to traditional underwriting. We forget that sometimes.
Well, there's not just that either, that typically the critical illness will pay per incident. So, if you, have a heart attack and then, there's something else that heart attack creates as a medical condition that is covered under that policy, they will issue that lump sum again for the other medical conditions. So it's not just a one-time event on those fully underwritten. So you're right. It may, be good for the client to go ahead and do that blood draw to get something like this. And the way we use it with income replacement solutions is on a typical individual policy. Kind of that sweet spot for funding those policies is a 90 days. A 90-day wait, right? So we've also quoted critical illness for the amount of whatever that monthly benefit would be times that 90 days. Or 120 days, because then you can file a claim, get a lump sum to cover medical costs while you're in your waiting period for your disability. That, it's a simplified issue typically, because anything under 50,000 on a critical illness can be simplified issue. You can also think of it as a gap coverage for your other, disability coverages that it's going to cover you. And in a lot of cases, people will do it if they have a high deductible plan. What is your deductible? You don't have to do, huge dollar amount on a policy like this. You can, but it's not necessary, but it can act as a gap.
Yeah, I think I'm hearing about these a lot more. So, however, I've also seen people reporting these policies as like a long-term care solution, and it's not that. It's a part of the planning. But that is a whole other conversation. So
it is, yes.
Yeah. Okay. So
typically those critical illness policies are not reimbursing for a facility or home care or any of those things. It is an actual medical condition that has been diagnosed and reported to the carrier that the client has experienced, and then they send out a lump sum payment. And then clients can use those funds however they need to, but it does not fund a long-term facility ongoing care.
You bring up a good point. So the triggering events are the actual condition. The long-term care is considered, there's a list of activities of daily living and other criteria. So that's how you'll know, what you have or what you might not have. If you're looking for something specific, kind of break it apart strictly based upon the condition versus some of these other factors.
Correct.
Okay. So going back to what I was saying earlier, accelerated death benefit riders usually sit on the contracts. They might have an admin fee, but they're usually on life insurance contracts for free. And Jackie, I know you read the fine print. So I usually see it for a terminal illness. Is it 12 months to 24 months sometimes with certain policies, 24 months?
It can be, yes. Yeah. So depending on each carrier obviously has their, different underlying language they put in that base contract. And so you will see some of those things in different contracts depending on which one you go with. And there are multitudes. So you always want to make sure you're getting the carrier that is fitting your client's, economic situation, what their occupation is. Different carriers specialize in different things. So yeah.
And I'm strictly talking about life insurance here, and I didn't let the audience know that. So since we were kind of in that disability mode, we're talking about a life insurance product. AD&D kicks in on the life side. There's qualifying events on the way you hit your demise, and not everything counts. So it's very odd when some people think, oh, okay, well, if I pass away, this is part of my life insurance planning. It only triggers if certain things happen, where the accelerated death benefit rider is for you to choose to activate while you're alive, but you might have a terminal condition. You can advance some of your benefits forward if you want to in advance to pay for certain medical bills, where AD&D is usually a group package is usually where we see that on the life side. So we've talked a little bit, kind of threw in a little bit of some life product in there, product knowledge, but there are, I think, one or two other things that are interesting products I think we could talk about to wrap up today, which I don't do a lot with them, but clients are starting to talk about it. So let's hear what you have to say.
Well, one of the things that clients are looking at is, now that we are, in a post-COVID world, we hope, a lot of people are starting to travel again. So one option that is not well known, that is currently in the marketplace through a Lloyd's of London, is what's called travel insurance. And my husband and I have used it. It is not expensive, but if you are going overseas in somewhere, and let me specify, it cannot be a location that is on the United States State Department's no-go list, but anywhere else that you travel, if you go to Europe, if you were to get sick and hurt there, you can do what's called travel health insurance. And basically it pays a lump sum. So you would go in, and we actually have a link on our website that you go in, you put where you're traveling to, what the dates are, and pick different coverage amounts. You can pay with it pay immediately with a credit card, and you'll have your medical insurance and everything, within a day that they issue these policies. So, we actually did have a client that he was in Hong Kong, had a major ACL tear, and ended up having to have surgery there before he could return home to the United States. And he had one of these policies in place. And not only did they pay for his medical care there in Hong Kong, but they also paid for him to travel back privately to the United States.
Wow.
Because sometimes when you have some of those major injuries, doctors don't want you to travel, and trying to fly commercially is very difficult to navigate airports and, get on and off airplanes and that kind of stuff. So there are a wide range of dollar amounts you can choose to help with something if that were to happen while you're traveling.
Very interesting. I have a lot of clients that are on visas and go back home.
Yeah.
So that's an interesting one to bring up. In addition to the foreign travel policies, there are a few other types of policies that many people don't think about, and some of our colleagues have been using them. So those are the more interesting ones that I wanted to kind of close up the conversation today. One being a kidnap ransom insurance, right?
Yes.
Can you speak a little bit about the utilization of some of these? Why are people buying these?
So typically, this is a non-traditional market. So you are definitely in a Lloyd's of London marketplace when you're talking kidnap and ransom insurance. And typically, we will see that in a business owner situation where maybe somebody is traveling to an area that is not, so secure, and they're worried that, it is a situation where they could be kidnapped and that, the kidnappers could, demand a ransom on those individuals. Typically, they are private. The person that they're insuring typically doesn't know these policies are in place. And that's by design. You don't want whoever is doing the negotiating with the kidnappers for the client to know that they have those coverages in place, or what the dollar amounts are. And so in reality, some of these situations, we recently had an advisor that his son was going on a mission trip right across the border to Juarez, Mexico. Well, we know there's a lot of cartel activity in Juarez. So he was very concerned about his son, traveling over the border. So we looked at putting, a small policy in place on him to do that. And we also had a scenario where we had another advisor that his son was going to school in Dubai. And I'll never forget that, when he went to school in Dubai, that first Thanksgiving, he had said to his parents, well, we're going to go to Lebanon for the holiday.
Oh, gosh. Can you imagine that?
No, you are not going to Lebanon. I'm sorry, that is not happening. But before he ever left, they made sure, because he was traveling to the Middle East, that, suburban kid from, Erie, Colorado, that, he didn't know maybe the dangers in the world around him. So his parents wanted him to have those coverages. But it's not just for that. It's for business owners who do have maybe executives or people who are working in areas that, there's cartel activity or, even terrorist activities to have some of those coverages in place.
Unfortunately, it's a real thing. So there's definitely a need there. And so some of those travel options that are coming up, like you said, as we're doing more, these policies will probably become more popular. Outside of these top hat or some of these specialty occupations, I know that we work with Lloyd's of London. Is there a difference between a top hat versus, say, the golden handcuff? How would that be a little bit different policy?
Well, with a Lloyd's of London, top hat is typically if you think of your domestic market, for highly paid executives, those C-suite individuals that maybe in the traditional marketplace, they're only allowing a certain dollar amount per month. And the Lloyd's of London, once you have a policy in place in the domestic marketplace, you can then go to them and say, here is the offer that we received from a traditional domestic carrier. We would like to add an additional X dollar amount above and beyond that. And here is his income that we're looking to cover. So there's no additional underwriting in that situation.
It's like an enhancement. They already know it's already there.
Yeah, they're using using the underwriting that happened on that individual policy in the Lloyd's marketplace to make a determination whether they want to add that top hat policy to the existing coverage.
What's the lowest income that you've seen for one of those be available?
Well, if you figure, on average, most carriers will participate somewhere between $35,000 and $40,000. So when you're getting to somebody that's over $1 million of income, you can definitely look at possibly having a top hat. If you cannot, for whatever reason, layer on multiple, because you do have the option of layering on multiple domestic carriers to get to the max monthly benefit you can, and then add the Lloyd's. But I would say typically at 1.2 or $1.5 million of income is typically where we see those. And something else that, when we were talking about the Lloyd's marketplace that we didn't really cover, if there's anyone in the universe who is working with professional athletes. Having individual disability insurance for those, there are options for that. We have seen scenarios with professional skiers, professional golfers, NFL players, so the motocross, we, had a motocross rider on the specialty sports. And so, that is also something to, if you are in that marketplace and they're, it's rare, but, those are kind of fun cases to work on because they're going to be household names that you hear every day, that, they, are looking for coverages as well. So if you have a relationship in that space, don't forget about that as well.
Yeah, great. Thank you.
Yeah.
Anything else that you think the audience should know about planning for their 2023 year?
I would say the big thing is just start the conversation. Anytime you have a business owner, ask them if they have some of these things in place. And if they haven't, what is the thing that keeps them up at night? What are they worried about? And just ask the question, I think is my big thing is, a lot of advisors don't ask that question versus having a client say to them, well, what about this? Be the advisor or agent that asks that question first. That, to drive that conversation.
Yeah, I think what's been a lot of fun, our team collaborates. And so when you have certain people that you work with and you specialize, there are teams like yours, like, I work with, a lot of different advisors too with shared clients. And so you can bring solutions, but you don't have to fully be an expert. There's ways to work through your agency. I'm always happy to help find a team to help anybody that has the question, especially if you're hearing about these things, but you're not really sure how to get started, or that's not your area. We have the ability to connect you with the right network. So,
and I think for us that, one of the things that we as a value proposition bring to our advisors, financial planners, CPAs is that, we're an independent source for, multiple income replacement solutions, that it's not putting a round peg in a square hole. It is every single client situation is a little bit different. Let's try and customize this to make sure you are fitting the right solution for that client and having the marketplace available to you to shop. And as I say that, I'm thinking, if you do have clients who have medical conditions that you think there's no way they're going to get any of these coverages in place, let us know. If your team has the ability to shop that in the marketplace and have an impaired option, there are so many things that you think traditionally most life insurance or disability carriers they're not going to touch that risk, but we have the option of sending that out to our underwriters, and we do it every day with things that come in to see if those are options. And so having a team that has that independence and the ability to shop that for you is a value add to your clients too, because you have the ability to go back to them and say, I didn't just go to this one source. I have multiple sources that we looked at to make sure we were getting the right solution for you.
Well, I mean, that's been huge for me because I've been able to, like you said, there's a marketplace. And so when there's a case, maybe like an inquiry that we can do, we can go. And because of our relationships and through agencies like yours, we can get to the underwriter and ask the real questions and not just follow a guidebook and show specific kind of the custom. Not everything's the same, and funny things happen in life, and that's why there was a prescription or a condition, and a follow-up or two. We can explain it, do a cover letter, and then go to some of the primary carriers. But like you said, you talked about impaired risk carriers too. So what's nice is we can go kind of a 1, 2, 3 and kind of just tackle it from different perspectives. Yep.
So yeah, I would say, don't just accept no as the initial answer. Usually there's somewhere as a maybe or a yes in there. And, if we can find it, we're going to do that.
Well, and then also if there is a solution, but it's not now and it's a year from now, then you can work with your client and put it on the calendar. And that's just helpful for them. So they just know, all right, I've been, someone's an ally for me for the future. And so I know that we've done that before with certain conditions. So I think that's a great place to stop for today, Jackie, and there'll be more to come. So thank you so much for joining me today.
Thank you so much for having me.
And I'll see you soon. I'm not sure when, but we'll make it happen.
Hopefully it's very soon.
I know.
In person.
All right. I'll talk to you soon. Thanks, everybody.
All right. Thank you.
Thank you for joining us on today's episode of The Amber Stitt Show. For more information about the podcast, books, articles, and more, please visit me at amberstitt.com. Until next week, enjoy your journey at home and at work. Thank you for listening.